Strictly for the family.
Strictly for the family, bro. Before they start knocking on my door and start trying to give me the injection, you know them way, innit? So let's go. Yeah. So let's go back over here. All right. So we're live now. All right. So XAU USD is a derivative product. Yeah. It's just showing the strength between one thing and another thing. GBP USD, which is what we are looking at, is the strength of the Great British Pound against the United States dollar. Now have a look. I'm going to scoot all the way up. These up here, as you know, are our time frames going from seconds all the way up to 12 months at a time. All right, meaning that every single one of these candles, what I was explaining to my 7-year-old yesterday, every single one of these candles can be represented by a time frame. So right now, weekly, every single candle that you kind of can't see because it's so small is a week in time. And we can see that all the way going back to 2007, this market has been falling, meaning the Great British Pound has been falling against the US dollar, meaning it's been losing strength. I said a few times, can you remember a time that you was able to go to America, all right? This is way back in the day, and you get $2 for every pound. You was going to America like you was, I was going to say P. Diddy, but maybe you don't want to be P. Diddy right now, but you was going to America like you made it. You was out like, Jesus, you gave you £100, you got $200 back. You're just trying to buy FUBU, you're trying to buy Rockaway, you're balling. But now, because the strength of the Great British Pound has been falling so, we're at a stage right now, we can only get $1.25 for our pound. We're going over there like, yeah, I don't think I'm going to be in Gucci going too nuts because it's kind of, I don't really feel richer. I don't feel like I've made any more money. So this is the whole point, the strength of one currency to another. Now, I can see that it's been bearish since 2007. So unless something changes fundamentally in the world, and all of a sudden the Great British Pound starts getting some strength from somewhere, because we all of a sudden start to do something. Guys, let me ask you a question. What does the UK do? Does anybody know? What does the Great Britain actually do? What do we produce? What do we create? Somebody answer.
Nothing.
Answers on a postcard, absolutely not. Once upon a time, they used to say we was a service industry. They used to say we was like a financial center and different. Is that the case now? I don't think so.
It's still the case. It's still the case, Jay.
You think so?
Yeah. A lot of jobs didn't go to the European countries. Still the financial center.
Well, there you go. Yeah. You understand what I'm saying, yeah? But the reality is that on the grand scheme of things, when you're looking at Japan, you're looking at this, you're looking at that, and you can identify certain places whereby, we're producing some stuff. British. Name me a British brand. Name me 3 British brands. Iconic.
Burberry one.
I was going to say Burberry, but that one's bait. But let's go again. Name me 3 iconic British brands. It's a problem.
What, Rolls-Royce?
Go on.
Ain't Rolls-Royce an English brand?
Is it? Rolls-Royce? Yeah, everything in Rolls-Royce is BMW. Everything in Rolls-Royce is BMW by the badge and the shape of it. Yeah? So the point I'm making to you is you're British. You live in Great Britain and you can't name 3 iconic British brands. So I'm saying to you, my point I'm making in regards to this chart, I'm wondering what's going to make this start doing this. Unless United States dollar gets extremely weak, and bearing in mind US dollar is the reserve currency of the world, they are the big boys, love it or hate it. So it's in their interest to protect their country and their currency. Hence the reason why they've been pushing up interest rates for time and keeping their currency, stimulating the strength of their currency for so long. Yeah? Because they have the power to do so. The Federal Reserve. Okay, so looking at this chart now, this is starting to make sense. This is a Great British Pound against the US dollar, and it's been falling since the start of 2007. We get it. We know why. We know why, because we've got Great British people on the call, and nobody can name 3 Great British companies. And the service industry or the financial capital of the world, I would beg to differ. I would say, we're still are active there, but when you've got Hong Kong and you've got this place, you've got other things going and doing bits and pieces. I don't know. Okay, but either way. So when I'm looking at this market, I am thinking to myself that I am ultimately bearish in GBP USD. I ultimately believe that the Great British Pound will continue losing strength against the United States dollar yeah, unless something really dramatic happens with the United States dollar or the Great British pound. And if that is the case, the chart will show me, because it will start doing this. Start breaking structure in this direction. So therefore, I'm interested in selling. Let me show you something as well. Very, very simple concept. When it comes to any market, and I say this every morning, but I'm going to say it again because I'm telling you, big traders, people that have been trading for years, forget about this concept, is I always want to buy in a discount and I want to sell in a premium. Somebody name me a time when you want to go and you want to buy when the things are the most expensive they've ever been. Name me a time when you want to do that. I don't ever want to do that. I don't care if I'm in Tesco's, I'm trying to get a discount. Yeah? I'm at the tell her like, yo, you sure you're going to charge me £100 for the whole shopping? Oh my God, yeah, it was discount. If I go and I'm going to buy that jacket, I'm looking at the girl behind the counter like, come on, hit your friends and family button. I know you get 20%, stop ramping. I want to buy at a discount. And if I was a seller and I purchased loads of whatever it may be items, I would want to sell at a premium. These markets only do one of three things. They go bullish, they go bearish, or they go sideways. That's the only three things they do. You're never going to catch a market that's doing this, loop the loop. It doesn't do that. It only does one of these three things, bullish, bearish, or sideways. And every time it does that, a range is created. Whoops. A range is created. This would be a bullish range over here in between these two blue lines of the market pushing up. Yeah? This would be a bearish range in between these two blue lines of the market pushing down. Pushing down. And this would be a consolidation, sideways, or accumulation, however you want to describe it, range of the market making equal highs and equal lows going sideways. And therefore, I always would want to buy at the bottom, even if this, look, ultimately, you always want to trade in line with the trend. You've heard the phrase, the trend is your friend. So if the market's going up, ultimately, I want to buy. And I'd want to be buying at the bottom of the range. But if you are advanced enough, you can take retracement trades, which are against the trend. And I would want to be doing that, selling from the top of any range. If I was selling in this downwards market here, I'd want to sell from the top of this range. Yeah. And if I was daring enough to take retracement trades, I'd want to buy at the bottom of the range. And the same thing in consolidation. I'd want to sell at the top and I'd want to buy at the bottom. A basic concept. Someone's like, oh yeah, I know that. I know that. Okay, you know that. But when you're trading, you don't do it. Because a concept that we, the Unity family have developed is our Russian doll concept. Understand that the market is fractal. Now, don't let my language scare you. All fractal means is that it happens, the same thing happens over and over and over and over again in the markets as you zoom in. So when you're zoomed out right now, look, we are looking on a weekly time frame. We can see the market doing this. Look, lower lows, lower highs, lower lows, lower highs, lower lows. If I zoomed in just to this little area here, I would see the market doing lower lows, lower highs, lower lows, lower highs, lower lows. And if I zoomed in again, just do a little leg in here, I would see lower lows. You get what I'm saying? It's fractal. It happens over and over and over and over again. Okay, so right now we're looking at this market and we have a strategy. Our strategy is about confluence, about understanding market structure and price action. Okay, so for us, we cannot, even though this market is going down in this much larger time frame, I want to take a trade today. I want to make money today. So therefore, I need to understand what the market is doing today, not what it's doing over the last however long and what it's been doing over the last since 2007. I need to know what's happening today. So though I understand that this is the bigger picture, this is my bigger Russian doll. Yeah? Let's explain the Russian doll because it's visual. Yeah? I want you guys to understand it visually, okay, about Russian dolls. Because someone's like, Russian doll, what the hell is he talking about? What I'm talking about is I remember a time when I went to my granny's house. You know, the granny's house where she had bare figurines everywhere. Everything was made out of glass. There was fish. There was glass fish everywhere. Yeah, you can remember? I don't know if it's just me, but my grandma had glass fish and all the table was covered in plastic. There's plastic on the floor. There were some little plastic things that you were hanging from the door when you walk through into another room, yeah. and there was glass fish area, and there was this Russian doll, yeah? She had this little Russian doll like this. And you opened one, there was another one inside, and there's another one inside, and another one inside, and there was all of these dolls were contained within this big one. And this is what the market is like. Inside of bigger structure, there's smaller structure. Inside of smaller structure, there's smaller structure and smaller, and it keeps going. So therefore, you can't just be looking at this structure here, because this structure has to have respect for its container. And then this structure has to have respect for its container. This might be the 1 minute, then the 3 minute, then the 5 minute. No. This is jump up a bit more. It could be the 1 minute, it could be the 5 minute, it could be the 15, the hour, the 4 hour, the 12, the 8 hour, the daily, the weekly or monthly. That's how the structure can contain the markets. So let's have a look right here. Okay, let's go back over here and look at these markets. So this is it on a weekly time frame. Let me zoom in. When I go to my daily, have a look. I can see daily structure. Look, I can say the market went up here, then down here, then up here, then up there. Every single one of these candles are daily structure, and it's daily candles, sorry, and it makes a structure. It makes a higher high and a higher low, a higher high and a higher low. You must be able to identify this. Yeah, the benefits you have is you can go on tradingview.com and you can do this. You can identify this structure all day long. You can go back historically and see this structure. Now, I can see from here that the market came all the way up to this little line here. Look, what a coinkydink. What a coincidence that I drew a range. Have a look at the range that I drew. Touching some of these data points. Oops. Have a look at the data points that I was touching. Just like connect the dots. Now, when my son was asking me last night, how do I do this? I said to him, all you got to do is connect the dots. He connected this dot and this dot. It created an angle that he drew. And then we had a completely absolute parallel line that we pulled out, and we touched the bottom of some data points. Okay, where I can see the data really congregate. A parallel line. What a coincidence that that market came up to that parallel line and watch, have a look, kissed it on its mouth and then fell to the other parallel line. Then it came back again and kissed it on the lips, and we're having a reaction from there. I'm expecting this market to have a reaction from there. Now, let me tell you something. The first thing I know about the markets is I don't know what the markets are going to go and do. If some traders out here telling you, I know that it's going to go up, it's going to go down, he's lying or she's lying. Because if they know, then why don't they sell the house and put the house on it? Why don't you put everything on black? If you know something, if you come from the future and you know the market's going to fall, because you don't know. You have an idea, you have a clue based upon your technical analysis and fundamentals, and then you must manage risk. I was going back to talking about, from the start when I was talking about things that we need to understand and learn, and we're using trading as a vice to learn this. But risk management is a life skill. What do you mean you've only got $3,000 in your bank account and you went and bought yourself $2,000 pairs of shoes? That's not really managing your risk very well, is it? And historically, people that look like me, villagers, have been really poor at managing risk. I'm sorry. We've got the shiniest cars. We've got the biggest chains. We wear the best designer clothes, but we have nothing. I'm sorry, I said it. So risk management is a life skill. How do we manage risk in our life? Do we have money for a rainy day? Do we have any investments? Is anything growing? Are we spending far too much on a makeup and hair, and little Jermaine ain't got nothing when he turns 18? But yet when we work out how much money that we spent on hair and raves and whatever it may be, the cliche stuff, that we could have been parking up a percentage of that money into a Hargrave and Lansdowne account and investing in the S&P 500. So when little homeboy turns 18, he's got a little bit of money to have some options. So he's not on the road. So he's not getting attracted by, someone who's got fresh trainers and a new car. Because he's like, nah, bro, I'm not going to lie to you. I kind of got 50 grand in a Hargrave and Lansdowne account for me to do what I want to do. Nah, I don't need to do that. Nah, sorry, bro. It's not interesting to me. These are the things that I'm saying we are using trading in these markets as a vice, as a tool, but it's going to teach us so much more about ourselves. All right. So right here, this market that we can see, have a look on our daily time frame. Okay. Pushed up and touched our top of our range, our bigger Russian dollar. We had a reaction. That reaction broke structure. And this, for us, our unity strategy shows an indication of what the market wants to do. But we also understand that markets move in waves. I've just told you guys that. Higher highs and higher lows. So even though this indicated this direction, we're expecting, after seeing an indication, that we are going to see a correction in the market. So the market indicates first of what it wants to do. Have a look. I'm going to help you guys out if you don't understand it. And for the people that do understand it, that are still doing something else when it comes to, you know, taking their challenge, then I'm going to drum it in your head again. I'm going to be that older brother that's just constantly drumming it onto you. That's the indication of what the market wants to do. And then afterwards, we see this. This is what we call a correction. The markets always correct. Yeah, they always correct. This is a correction. After our correction, we are expecting to see a continuation of what the market wants to do. Okay, this would be our continuation. Now, prior to this continuation, this market came up here and started going sideways for a little bit, thinking about it, accumulating orders of all the people saying it's going to go up, it's going to go down. There was a conversation, an argument that was happening back and forth. I'm buying, or I'm selling, I'm buying, I want to sell, I'm not too sure. And then we've seen this market break out of this range, and started to continue. Okay, so when it starts to make its continuation, once again, I can draw a range. Now, these trend lines don't mean that when I draw a trend line, as soon as the market gets to this line, I'm going to hit the button. No, that doesn't mean that. And you hear me repeat that time and time and time again, because I've heard people say, we might trade with trend lines. And it's not trend lines. It's just a range so that my eye can see how the market's moving. I can see that right now this market's moving down within this range. If it starts to go up in here, it's no longer in that range. That's what the trend line's for. Now have a look here. This market came up here, indication, corrected, gone sideways for a little bit, and now indicated outside of this box of what it might want to do. So this here is looking like another smaller, the exact same strategy. Why? Because these markets are fractal, as I just told you. So right now, this same indication, correction, continuation, a much bigger time frame is happening here. Look, indication, I'll make it white, correction, and I'm hoping to see a continuation. It's the same thing over and over and over again. So right now, this market, out of this range, indicated what it wants to do on a much bigger time frame, because we're on a daily. All right, have a look on a 4 hour. These are 4 hour candles. This whole energy back up here has been part of the correction. And now I'm hoping when I start to see structure, when I start to see the exact same thing happening again, indication, correction, continuation, I'm hoping that it's going to start its journey in this direction. Now, because I teach you guys about all facets of trading, there are some concerns that I can see. All right, there are some concerns that I can see in this correction that it might not turn around right now. Does anybody see what concerns that I may have? Some of the people that are a bit more advanced that have been here for a little while. Can anyone see any of the concerns that I may have?
Imbalances.
I can see some imbalances. I'm looking over here and I can see a huge imbalance. Oops. I can see a huge imbalance in here. Now, I do not know if the market wants to go and correct that imbalance, but all I can explain to you about imbalance is it's an inefficiency in the market. It's you standing at the shop counter waiting to go and buy your fish at £10 a pound a snapper, if that's what you're into, yeah? And for whatever reason, because the guy in front of you bought so many and pushed up the price because he had the demand, he went to the counter and said, let me have 100. Because of the demand, remember, when we have more demand, prices goes up. And we've already explained that. When we have less demand and you have a huge supply, prices go down. But because the guy in front of you ordered so many, you get to the front of the counter now and he goes, okay, yeah, £15 for a pound of snapper. And you go, what? It's £10. He's like, nah, bro, we've flown past that price. Now, that is an inefficiency in the market. You've been standing in line for the last 4 hours. You're going to go home and cuss some wicked word on that shop, on that market. You can, I'm never going to go there. You lot shouldn't go there. It's a waste of time. Blah, blah, blah. That's what you're going to go and do. You've been standing in the queue for hours. So what the market likes to do is it doesn't like an inefficient market. It wants to give you an opportunity to buy at your price. So it says, you know what? The owner, the boss man comes out and he goes, oh, listen there, Jivan, yeah? Sorry about that. I know you're a good customer. You've been here. We understand too. Just wait for a little while, and we're going to give you an opportunity to buy back at that around that price. So the markets like to come in here where Jivan was standing and say, look, Jivan, it's not £10, but for $11.50, you can do your thing. And then Jivan, yeah, he's a little bit upset. He had to wait a bit longer, but at least he got his fish now and he's happy. The markets do not like inefficiencies. Have a look at the last inefficiency we can see in here. There was inefficiency in here. Okay, the markets came and tapped back into that inefficiency. Have a look at some inefficiency over here. There was inefficiency over here. The markets came and tapped back into that inefficiency. Now, it's not all the time the markets have to close the whole inefficiency. They didn't say, Jivan, you can buy it at £10. So listen, you can buy it around that price, and he got it for $11.50. So, you know, it's better than £15. So we don't know whether the whole imbalance is going to be closed, but it just doesn't like gaping wounds of imbalances. Okay, so I'm a bit concerned by this imbalance over here, which is 4-hour imbalance. And we can do, and how do you identify imbalance? We want to see 3 candles and to see that the middle candle doesn't have any overlapping wicks. All right, US 30 is moving. We're going to go have a look at it, all right, in a minute. All right, it doesn't have no overlapping wicks. All right, if it doesn't have any overlapping wicks, then that's an imbalance. Look, have a look at, let me zoom in and show something. Somebody doesn't know this. I know there's lots of people that do know, but there's somebody in the corner that doesn't know. Can you see these candles in here? Let's imagine these candles, 1, 2, 3. The wicks are all overlapping, so there's no gap in this. Let me zoom a bit more because somebody's on his iPhone, somebody's got the cataract, and somebody can't see too close. So let's just zoom in. 1, 2, 3 candles. We can see no gap in between because these wicks are overlapping each other. Can you see that? But let's look at another example of an imbalance. Look at these candles. 1, 2, 3. There is an imbalance in between these candles here and here because the wicks or the bodies don't overlap. That's an imbalance. Just like we can see another little imbalance here because these 1, 2, 3 left an imbalance in between here. And we can see a further imbalance between, if this is the middle candle, there was an imbalance in here between these 1, 2, 3. The market didn't like that imbalance and came and tapped this imbalance and kept it going. Now, this imbalance, don't get twisted, the market could come back for it. We don't know when. Yeah, we don't know when. Oh, have a look. Close that imbalance. Yeah, you had to wait around. Jivan had to wait around a little bit longer, but close that imbalance. Gave him an opportunity here to buy at his £10. And he bought, and he pushed the market down a little bit. Yeah, and then it kept going. Look at this other imbalance. Look, came and closed it. Gave Tom an opportunity to buy or sell from here. And he sold from here. Great. Yeah, obviously in our example, we're talking about buying the fish, but in this example, it's selling off from an imbalance that's higher above, okay? All right, cool. You guys fully understand that now, inside and out. For somebody, it's been a complete revelation. Now, oh, I get it. Good, all right? So we can see here right now, currently, that the market has come up to the top of this trend line, this line here, and this line here that I'm going to make slightly thicker. Now, the trend line is just a line I've drawn on my screen to help me understand what the market's doing. It doesn't come up to my trend line and check in with me. My phone rings and goes, are you ready right now? We're going to turn. That's not what happens. It's just a trend line for me. So I am concerned that this market might decide, you know what, Jay, I want to push up into here because Jivan's been waiting here for time to sell from this price point over here. It might do, but I don't know. Yeah, so I have to just, only thing I can do is I can read and react to what the market does. I can't look into the future. I can only look left into the past. So the only options I have is, if I'm a day trader and I want to take day trades, is to be able to read and react to what's going on. Now, at the moment, the market pushed all the way up here to this highest point and came all the way down here and it started consolidating. The market's ultimately trading within 2 boxes. What's going on here? Oh, I've locked it. The market is trading within a box which is this high and this low at the moment. It is. All right. And even within that box, we can see some further sideways action, which is in here. Okay. Let me draw it so you can actually see the box. Now, I said to you, the markets only do one of three things. Even if you were just taking into consideration that this market was trading in consolidation and you understand the basics of selling from a premium and buying from a discount, have a look. You bought from here, you made money. You bought from here, you made money. You bought from here, you made money. Have a look. You sold from here, you made money. 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 Now, I am not saying that all you do is you draw a range and you sell from the top and buy from the bottom. You don't. It's a little bit more complex than that. But I'm just saying, if you understand the basics, how could you be selling from here? And how could you be buying from here? It means you don't understand the basics. I'm telling you, there's somebody here that's done it, or is currently doing it. Now, I can sell when I see the market indicate what it wants to do. Correction, just to say, are you sure you really want to do this? And then continue. Well, then I can say, well, this market looks like it wants to go down, and I can decide to sell. Taking my entry below that level and my stop, depending on my risk tolerance, above the last high or above the swing high. Then I can take that trade. But if I don't see it do this, I am not taking the trade. I have to have some sort of rules. Remember what I spoke to you about our rules in the start? We have to have some sort of rules. If we think we can just drive in the Boston all day long and get no tickets, you're mugging yourself. You're going to get a ticket. If you think you can just hit this button anywhere you feel like hitting it and you're going to make money, my experience and my pain will beg to differ. Yeah. So on that basis, we're going to sit here and we're going to wait for our confluences, which is a simple word or a complex word for confirmations. We want multiple things building this picture of what may be happening. Somebody's going to tell us, oh, trading is gambling. Trading is not gambling. Trading is about stacking the odds in your favor, just like the weatherman. Is the weatherman a gambler? No. The weatherman is going to take into consideration the amount of moisture in the air, where the wind's been blowing, this is happening, that's happening, there's been a cold front coming from here and a warm front coming from here. And based upon that, we have this percentage chance of rain in your area. You're going to step outside of your house and it is sunny as hell. Sun's beating down on your face. Was he just winging it or chancing it? No. He used the information he had and he gave you his analysis. Now, if for whatever reason, just before you came outside your house, a gust of wind blew away that storm cloud and it was sunny, how was he supposed to know that was going to happen? He can't predict the future. He can just use the information that he has to try and stack the odds in his favor. And if he knows what he's doing, if he has an edge, if he has the right equipment to check the weather and the warm precipitation that's sitting here and this and blah, 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 then more times out of 10, your weatherman's going to be correct. Sometimes he'll be wrong. More times out of 10, we are going to be correct if we stick to our rules, and many times we will also be wrong. But we understand how to risk one and make 3, or risk one and make 5, or risk one and make 10, meaning that we can be wrong even more times than we're right, but we can still be profitable. This is another life skill. How many times do you need to fail? Let me ask you a simple question. How many times did Usain Bolt lose? Nobody knows. Because all we remember is him doing that at the finishing line, and he's the fastest man on the planet. But I'm telling you, he was losing races before that. How many shots has Michael Jordan missed? Who cares? He's MVP. He's Michael Jordan's got his own shoes. But I'm telling you, he misses a whole heap of shots. The stats are nuts for the amount of shots that he misses. Same with Ronaldo. He's the best. How many shots does Donny miss? Not for them. But he's in the right place at the right time to be able to take them. So for all the people that have started a business and failed, I thought this is long. For all the people that try to go to the gym and then, oh my gosh, it's long. Start to eat healthy for a weekend and, oh my gosh, let me just go back to McDonald's. You're never going to win like that. Your favorite person's favorite person who's got the body that you dream of, you didn't get the body like that. So it's the same with our trading. And you have to understand that you will take losses. You're in the ring. You will get punched in the face. If you don't want to get punched in the face, get out of the ring. Don't be here if you think that you're going to take a trade today and it's going to make you rich. You're going to take another trade, it's going to make you even more rich. Ask yourself, if that was the case, all these guys that you see on the internet, why don't they own a small island somewhere? You know, why aren't they out here just feeding the sick and the hungry? Because it makes every time they take a trade, it always does what it's supposed to do. Because it doesn't always do what it's supposed to do. And this is why when we trade, we only risk 1%, maybe 2%, if you're truly understand your strategy and have an edge of our capital at any one time. So this comes into the phrase of money making money. Because if I've got £100 account and I make 1%, how much money do I make? If I have a £100 account and I make 1% of my account, how much money do I make?
What's that, a pound?
A pound. And to be fair, a pound ain't going to do naught in this day and age. If I have $100 million under management and I take the exact same trade and I make 1%, how much money did I just make? How much? If I got 100 million quid and I just made 1%, how much money did I make? Somebody knows and I want to get that interaction.
100?
No, not quite. I got
What's that,
100
10 bags?
million quid and I just made 1%. How much money did I make? No, not 10,000. See, this is why we have to do this. And don't feel any way because we have to grasp the numbers, guys. If I
Oh,
got
it's a million.
A million. I made £1 million. Taking the exact same trade that G-Van just took and made £1. So now you start to understand that. What do you think your bank does with all the money that you pay to your bank? As a very, very nice way of understanding this, which I said before, which really lit a light bulb in my head, was that when you work, and most people here work, and you work hard every single month, your company doesn't pay you. They don't pay you for the work that you do. And somebody goes, oh, what's this guy talking about now? The company that you work for, all month dealing with absolute nonsense from your boss, they don't pay you. Who do they pay? Who does the company pay every single month? Whether it's the first of the month, end of the month, who do they pay? Somebody tell me. Who do they pay? They pay the bank. Because if they paid you, they'd give you your money, Trinity, in cash, and you take it and decide to give it to the bank. But they don't do that. They pay your bank. And you, more times out of 10, 90% of the time, leave your money in the bank and you take a little bit out. Maybe some for some bills, some to go get your nails done, some to go get something to eat, but you leave your money in the bank. So do you understand how the bank could be having 100 billion or trillions of funds under management and then they could get their little 1% every single day on your money? Because you gave them your money. Your money's not sitting in the bank waiting for you to come and collect it. They are trading it in the markets. The only difference is they've got so much of it, they don't need to try and get a 1 to 10. They don't need to try and make 10% today. They can make 1% on their $1 billion or $100 million or $1 trillion and make a substantial amount of money. Because let me tell you something. When you've got 100 million under management and you make £1 million today, which is only 1%, £1 million is £1 million. £1 million is £1 million, wherever way you take it. Whether you made 1% or not, it's £1 million. Whereas G-Van's got his £1 and he's trying to buy a nice outfit for the weekend with his £1. He took the same trade as me. Me and him took the same trade. We got in the same time, we got out the same time, but the difference is he had £100 under management and he made £1. I had 100 million under management and I made £1 million. Now I'm in Bond Street living my best life because I just made £1 million today. Do you see how your bankers are out here driving around in Ferraris and Lamborghinis and living in penthouses? Because they're trading with your money. They're gambling with your money. So they've got a huge fund. Yeah, I'm a banker and I make a commission of whatever I make the bank. But if the bank's got $1 trillion under management and you just made them 1% and they're going to give you 10% of the 1% you gave them, you're living a good life because you're using other people's money. Now, unfortunately, a lot of us don't have the privilege of starting with £1 million. But what we can do is we can leverage prop firms, which allow us to have money under management, or we can invest our own money and trade it, managing our risk. Okay, so getting back to our charts. Okay, so I'm going in today. I've got that energy, that gym energy. All right. So we consider this money, currently this market price has just broken out of this range. So as I was saying previously, and to be fair, guys, I was in a sell in this market up here from this morning before I went to the gym, as I saw a structure break. Okay, and actually I'm lying from here, from up here. Okay, I took my money down here because I was in the gym and I wasn't managing, and I was expecting to see a reaction from here. Look at the reaction that happened. If I stayed in that trade, I would have got stopped out because I wasn't managing it because I was in the gym. Have a look. If I lie, I fly. Because look at the time. All right, 7:30, 7 o'clock this morning here. So at the time when I was going to the gym, the market came down here very quickly. By 8 o'clock, we was all the way down at the bottom of the range. I was happy with my little profits that I made. Maybe it was a 1 to 3 or something like that. Okay. And I closed up. And the market had a reaction back up here. But I am overall bearish in this market. If I had my way and I wasn't teaching, I'd be in again when I saw a breaking structure up here for the sell. Because I believed that this market was going to break outside of this structure, which it has done. Now, how is that going to benefit you? It's going to benefit you because now you understand the strategy. We are waiting for what? Somebody tell me what we're waiting for outside of this box. Somebody tell me the strategy, please. So I know that we're waiting for an indication, which we've kind of got right now. Then we're going to be waiting for what?
Correction.
A correction. And afterwards, what we're going to be waiting for?
A continuation.
Fantastic. And let me ask G-Van in particular. Are we going to trade with a stop loss?
100%.
All right. We're going to make sure we trade with a stop loss. Now, stop loss is managing our risk. Yeah, it means that if for whatever reason we are wrong, which we are there's a very high probability that we are wrong. Do you understand? It's very, very possible we can be wrong. That's why when Mumsy, when he's leaving the house, Mum says, leave, listen, take the umbrella or take a jacket. She slaps you in the back of the head. Take your jacket. It's sunny now, but let me tell you something. You're going to hit the bend. You're going to get out of the area and it's going to be snowing. So take a jacket. Because there's a probability you could be wrong. You're not correct that it's just going to be sunny for the whole day. It's the same with our trading. So we have to manage our risk. We have to be like, okay, I think this market's going to go down. But if it doesn't, if there was some if something crazy happens and all of a sudden, 9/11 happens or this happens or something we couldn't account for and the market decides to go against us and maybe we just got it wrong, we want to cap our losses. We cannot lose the house money to pay bills and to feed ourselves on this one trade. So we must manage it at our 1% risk so that we only lose £1. If that bank was wrong, it's only going to lose 1 million. It's got another 99 to make it up with. If you lose your £1, you've got another £99 to go and make it up with. But if you was to put £60 on it and you lose, well, now you effed me. You only got £40 left. And I'm like, bruv, it's looking mad right now. All right. So have a look. The market has just indicated outside of this little range. Now, I'm a bit concerned about this range because it's a range within a range. But maybe the market's going to get all the way down to this bottom of this yellow box. Okay. So right now, we've seen an indication. Have a look. Even on the 5-minute time frame, we've got a 5-minute close. This is the time frame I tell you guys that you want to be looking at. You don't really want to, unless you're quite advanced with the strategy, being smaller than a 5-minute is a bit more risky. But we can see here some concerns where the market might want to come back in. I'm not going to draw them all, but I'm going to use this indicator here, which is called fair value gap, Spaceman. Me trying to close some of these as well. I don't know why we've got all of these in here. All right, this one here is a little indicator that will show us those imbalances. Can you see one here? Can you see one here? All right. I don't believe we're coming up for these ones. But the market's allowed to come and tap into these ones as a correction before continuing. The market may not. It might decide, you know what, I just want to go for it. If that's the case, is what it is. You might miss that trade. Okay? But I want to be patient. Another thing that trading teaches us, patience. And wait for my correction. If I do not get my correction, this market just starts falling to hell, there will be another bus. Let me tell you something, guys. For those of you that travel by bus, it's unnecessary. You run. I see man running like a lunatic, sweating out his shirt for the bus. Now, you should have either woken up earlier, or you need to understand that there's going to be another bus in 5 minutes. Just be easy, bro. Why do you want to go and fight for this bus? There's another one going to be here in 5 minutes. Chill out, chillax. Sprinting like Atto Bolden going for remember Atto Bolden going for the bus. Just allow it. Take the time. There'll be another one. So it's the same. I want to be patient here, understanding the strategy. I'm waiting for some sort of correction. Yeah? Because if I just hit the button now for a sell, and I'm telling you, Sod's law as well is when you hit the button is when it will start going up. You're going to hit the button for a sell, all of a sudden it's going to start going up. I'm telling you, remember I said it. Sod's law would mean the same time you hit the button, the same time it starts going in the wrong direction. I'm going to wait. I'm going to be patient. I'm going to look at time. Can you see time here? It's 9:28. Oh, we've gone over. All right, but we did start a bit late. No problem. It's 9:28 here. I know that in a minute and a half, I'm going to get a 15-minute closure here, half an hour closure here, 10-minute closure here, 5-minute closure. So therefore, afterwards, then I could see if this market's going to go and correct for me to be able to get in. And that is how we trade. Our strategy is about indication, correction, continuation, but understanding the bigger picture, the Russian doll structure. And the Russian doll structure has us believing that the market was at the top, have a look, of a range. Okay, that we are at the top of a range in a premium. And the market's had a reaction from it. Boom, breaking structure. They then corrected. And we're expecting to see a continuation now that at least, if we can get in, breaks that structure here. That's what I'm expecting. That is what I am expecting. Unless this market decides that it hasn't gone deep enough into this area here and starts breaking structure and pushing up here, which is possible. It's unlikely, but it's possible. Because even if it comes up here and then starts to turn around, it will still be within our area that look, once it doesn't break this high over here, this market is still making lower highs and lower lows. If it comes all the way up here, it'll still be a lower high to make its lower low. Do you understand? So this is why we have to read and react to the market. If that market goes and breaks that structure above here, I'm going to go, okay. I'm going to be like, it wasn't expecting it, but okay. If it breaks here, something else is happening. If it breaks here, I'm going to be like, whoa, we've actually broken swing structure. Because look, on a bigger picture, the market is trading within this high and this low. That's the bigger picture. I'm not expecting it to come and bust this high, but it's allowed to go all the way up to it and then turn around. That would be annoying because it's kind of breaking outside of this trend, but not impossible. All right. So as I said, guys, I'm going to be waiting right now for a correction. Looks like it might be happening now. Maybe. All right. Some green candles coming up into here and then a continuation. And I can choose if I'm technical enough to get into the continuation as the market comes up here. Have a look. Let's imagine we come up here. I could get into the continuation over here. Oops, over here. If I understand the strategy and I can see a clear breaker structure, or I'm going to wait till the candle closes below here. Okay, I'm going to place my stop above the last high, or safer place the swing high. But I really don't want to take this trade for 34 pips, but it's not the end of the world. It just limits the amount of profits I can make, okay, today, all right? Or I'm going to take it, you know, like I said to you, place my stop over here, over the last high. Or maybe there's a smaller high as this market wriggles down here. That's going to be my choice. Have a look at the correction. Have a look at me being calm. I was sitting here and just being patient. Because if I hit the button down here and I go, look, Jay, it's going without you. Well, it's going the wrong way now. So if I did hit the button down here, when this is a big red candle, I'd be in minus now. My profits would be going backwards now. but I didn't hit the button because I understand my strategy. And my strategy is indication, correction, continuation, making sure that I place my stop loss, above the last highs or above the highs and above any concerns that I may have. Concerns may include imbalances. Guys, any quick questions for me before we finish up? Yeah, we normally finish up about 20 past. I want to ask Alan, our fundamental specialist, if he is here. Is he here, Al? Al is dropped off the call, no problem, because it's maybe a bit late for him. I was going to ask him about the news, see what's happening. Let's have a quick glimpse at the news, all right? See what's happening, because, guys, the news dictates everything. Yeah, what do I mean by that? I mean, it doesn't matter about our technical analysis, about me saying the candle's doing this, that, and the third. If a bomb goes off in a financial district somewhere, that's going to move the markets. Yeah, if there's some fundamental things that are happening in the world, the fact that I've drawn lines on the screen doesn't mean anything. And today we can see some red folder, meaning high impact news happening in the United States, which are stuff about jobless claims. It's all jobless claims information here. These jobless claims, because it's high impact, can have an effect on the markets. So what we normally say is at that time, which is going to be 1:30 UK time, either protect your position or stay away from the markets because there will be added volatility. All right, guys, good morning. God bless. I hope you have learned something from this session. For the new people, I hope you've got a flavor of what we do here and understanding this trading. What I'm going to do now is I'm going to play something. We normally play something which is educational or, insightful that we can either discuss or have a think about. And I did say I was going to play that audio book, which is very, very powerful. I thought it was really good. I'm just looking. I don't know what I'm going to play. I'm just looking on YouTube, seeing what type of. All right, so we're going to play something different. I'll play the book afterwards, the audio book. It's something I haven't watched it. It says it's from David Bayer. It just basically says breaking free from money blocks, rewire your brain for riches in just minutes. We're going to play that. It's only 40 minutes long. If you're able to stay in our session, then fantastic. For the people that are watching on YouTube, I hope you got some value as well. Like, subscribe, share, and all the good stuff. That will